My name is Ethel Adorno, a social media strategist here at Business Day, and I'm honored to be your moderator for today's important conversation. Today's topic is tax planning for SMEs, how to maximize your tax liabilities. I'll take that again. Tax planning for SMEs, how to maximize your tax liabilities. As an entrepreneur and a small business owner, one of the most overlooked aspects of building a sustainable business is understanding how to navigate your taxes efficiently and even more legally. And for many SMEs, taxes feels like a burden or even more confusing and complex. But the truth is, with the right planning, knowledge, and strategy, tax can become a tool to support your business growth. And that's exactly why we are here today, to demystify the tools and help you with the knowledge of how to manage your tax responsibilities more efficiently. And today, as usual, I've got brilliant speakers with me here today. I'm not here alone, and it will be my utmost pleasure to introduce them to you all. So to join us today is Oladejo Adeyemi, who is an Associate Director, Commercial Practice, Lagos. If you can hear me, please say hello to our listeners. Hi, Oladejo. Yes. Good afternoon,
Yeah,
and thank you for being here.
yeah, yeah. Good
Okay,
afternoon. Thanks for having me.
to join us again is Ubong Ita, a finance expert and software development consultant. Thank you for being here, Ubong. Please.
Yeah, hi.
Okay.
Thank you for having me. It's a pleasure to be here.
Thank you. Also to join us is Ebosatele Ohwelibe, I hope I got that correct, who is a tax auditor and a gender analyst. Please, if you're here, can you say hello to our listeners? Okay, moving on, we have Olajide Banjo, an accounting and finance professional. Thank you for being here, Olajide. And last but not the least, we have Taiwo Aladi Bobu. I hope I got that. Please correct me if I'm wrong. A group tax manager at Dufil Prima Foods Limited. Thank you all for being here today. We are excited to learn from your experience and insights. Okay, before we proceed, I would like to give a quick rundown of what today's discussion is all about. So we're going to take a brief presentation from each of our speakers, 10 minutes, and we'll now proceed to the Q&A section where I get to ask them questions and they will answer. Thank you. I would like to call on the first speaker, Adeyemi. Please, I would like you to start with your own presentation. Thank you all for joining and thank you all for being here.
Sorry, I can't hear you again. You can hear me.
Okay. Can you hear me now?
Yes, I can hear you loud and clear.
Okay, thank you.
So is it a general thing?
I can
No,
actually
Taiwo,
hear you.
I think it's just you.
Hello,
Though I can
Taiwo,
hear
can
you.
you hear me? I think it's his network. Okay, you can proceed, Adeyemi.
Okay, thanks so much for laying the background. I think the time is quite short, but we are just going to go through the pillars very quickly within the ambit of the time that we have left, so that we can accommodate all that has been scheduled for today. So generally, we want to look at efficient tax planning, for SMEs. In the course of my conversation, I will crisscross between what currently subsists, what exists now, what the law requires as of today. And then because we are currently in interesting times, when the laws have just recently changed, it will also be beneficial to just mention some of the things that have changed and what those things will be in the days coming. So just forget about the slides. This is a master class slide that we are trying to fit into a 10-minute discussion. So I'll just go through the pillars so that we are all on the same page. So essentially, for SME to be thinking of tax planning, what is important is you need to even understand what tax planning is. There's a reason why there is increased focus on SME, because globally, SMEs are usually the drivers of the economy. When you go to any functional economy where things are working, you see that you have preponderance of SMEs. Everyone just doing their own parts. So these are essentially companies that are of reduced size. Now, there are different laws currently in Nigeria. For instance, the CAMA defines SME in a particular way. The tax laws also define SME in a particular way. But for the purpose of this conversation, we should just know that SMEs at the moment are companies that have turnover or revenue of less than 25 million. That is the way they are currently constituted. The new laws that have been passed have given threshold of 50 million. The version says 50 million, a version says 100 million. I think the gazetted copy version eventually says 50 million, so we just work with that. But that is not going to take effect until 1st of January next year. So as it stands now, you're an SME if your revenue is less than 25 million. So the question is, why then do you want to bother about tax planning as an SME? You want to bother about that because you are not going to remain SME forever. And that's one very significant pillar I need every SME, to understand. You are never going to remain SME forever. At some point, someone else is going to be interested, maybe in the place of maybe coming in as a business angel, as an investor. At some point, someone is going to say, oh, I want to see what you are doing, and I want to see how this can scale. And at that point, it will then matter what have you been doing, before now. So we just look at some of the strategies that SMEs can deploy to ensuring that the tax burdens, are reduced. The intent was, of course, to look at some of the challenges that SME face, but you run the SME business. I definitely cannot know the challenges more than you do, but I mean, the knowledge is going to be, is expected that the knowledge of the tax laws, is reduced. And that's why, BusinessDay is helping, for instance, with this SME clinic, to be able to close that gap. It's also expected that there would be cash flow constraint. There will certainly be cash flow constraint because that every kobo counts as an SME business, and several other challenges that SMEs will have. But most significant of those challenges is the challenge of record keeping. I'm going to lay a bit more emphasis on that, as we move on. But again, I'd mentioned that these challenges are prevalent with SMEs. The fact that you may not even know what the law says, even when the law confers some benefit on you, you don't even have the understanding, or you didn't have the knowledge, to be able to apply those benefits, to your business. So we are going to look at why it is important, for you to think of tax planning, because of course you have to grow. It's important that your business grows. Like I said earlier, no one wants to stay SME forever. It's just supposed to be a phase, in the business. But what then do you need to do for this growth to happen are the things that we are going to be looking at very briefly. So, of course, you should know that there are different types of taxes. When we talk about tax, you have the company income tax, which is the corporate tax, or income tax, put simply, which can be for company or for personal, depending on the business structure that you have. And we also talk about that as we move on. You have the withholding tax, which in itself is not a special type of tax, but it's an offshoot of the income tax. But because of the way it is levied currently in Nigeria, it appears like it's a separate type of tax. Of course, then you have the capital gains tax, which is not a tax on income, but tax on capital gains. Again, I mentioned the scenarios as we go ahead, but just bear in mind that you can have income tax, you can have transaction taxes, you can also have capital gains, in terms of tax. Financial management is a big part of tax planning. So when you hear of tax planning as an SME, it's an outcome. It's something you want to achieve, but you have to think of how do you, what are the things you need to do to be able to to achieve those things. There are three key areas, where you want to look at. And I mean, part of it is the fact that you want to ensure that you claim all deductions as a business. You want to ensure that you have sufficient cash flow, to be able to support your business. And you also want to ensure that whatever benefits that should accrue to your business, depending on the type of business that you're doing, you are taking all of those benefits, in all. So reducing your tax liability isn't just a day journey. It's something that you have to incorporate into your business, and it starts from even the very beginning. What kind of business, what's the structure of the business? Yeah. I mean, there's a part of the slide that speaks to that. If you set up as a sole proprietor, for instance, there will be a different tax consequence that you're going to have compared to when you set up as a limited liability company. So there are some strategies that you can deploy to working on ensuring that you have strategic financial management, but I'm not going to bore us with all of that because of the constraint of time, so that we have time to take part of the fundamentals that I had mentioned. We should also know that there are some financial ratios. Again, you're not a finance expert. We will leave Ubong to talk to us about that, but you should know that some ratios exist that can help you measure the health of your business, and see how your business is doing from time to time, but like I said, I'm not going to bore you with all of that at this point. So let's cut to the chase within the time that we have left. Part of the ways that you can reduce your tax liability as SME is first for you to agree on the kind of structure that you want to have. It's extremely important for you to agree on the kind of structure that you want to have. Do you want to have a structure that gives you 100% of the control? Do you want to have a structure that puts in mind that there's going to be growth in the future? Because all of this will determine the kind of tax consequence that your business is going to face. The other major way is to ensure that you keep record. I cannot overemphasize this anytime I have the opportunity to interact with SMEs. Record keeping is extremely, 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 important for SMEs to undertake. Not because anybody is going to ask you now, but like I said, you're not planning to remain an SME forever. So at some point, when someone is interested in what you do, they're not going to they're not going to hear you out. They're not going to expect you to use word of mouth to say, this is what had happened. So if you had incurred so much in cost, that will be the time for you to bring it out. If you had realized so much in revenue, it would be good for the record to, of course, speak to that. And there are many more ways, through which you can actually minimize your tax burden as SME. So I'd mentioned the structure part, and look at the practical example that we have here in structure. For instance, if you're a small business and you have turnover of 20 million, if you have chosen a structure of a limited liability company, for instance, you will have to pay tax on that at 0%. And you know that when you're paying tax on 0%, you're not paying tax at all, based on how the laws are currently constituted. But if you have chosen a structure that's a structure of a sole proprietor, for instance, your income on that business, is going to suffer personal income tax, and you will certainly pay tax on it. So structure is extremely, extremely necessary. After this clinic session, some SMEs may have to revisit their business structures and see, okay, is this really what I intended to achieve? Or did I just come up with this at the time when the business was, when I was starting the business, because I just needed to start somehow. Now that you've started, it's a good place for you to then review what you are doing vis-a-vis the consequences that you're going to have in, tax-wise. I mentioned this earlier. Some of the benefits that even exist currently, you don't even know about them. If you're an SME and you're playing within the agricultural sector, for instance, there are some benefits that should confer to you when it comes to minimum tax, when it comes to, capital allowances and all of that, as a corporate, as a company. But if you are not even aware of that, how do you take advantage of that? So there are incentives, as the laws are currently constituted, not even talking about the new tax law now, just looking at what has subsisted up until this time. But if you are not aware of these things, you will not be able to take advantage of them. I'd emphasized on this point earlier, and I cannot overemphasize the need for any SME, to keep records. If you don't keep records, you are going to be at the mercy of whatever you say, and it's very difficult for anyone who wants to put money into your business, to take your word for it at that time. Of course, I'd mentioned that there are some claims, deductions that you could have realized in terms of capital allowance and all of that. It's a major way of reducing your tax, because that is a cost recovery mechanism, for you when you incur some capital expenditure. Another major way, which is a very funny one, because you, as an SME, you may have one or two staff members you are paying, and you're just paying them an absolute amount. Just say, oh, this person earns 350,000 naira. This 350,000 naira, you're going to have pay obligation on it, for instance. The way you can optimize that remuneration by ensuring you allocate the amount properly to different items that make up the bulk sum, as opposed to just saying, oh, I'm paying net fee of 350,000 naira, and then you are heaping up obligations for yourself, by not breaking that amount down into different items. And the example that I have on this part of the slide, is saying that if you are just 20,000 for transport and 10,000 for medical, there are some items that you would not have direct tax consequences on, even though the individual or the employee is going to be earning from there. So strategies like that can be deployed towards ensuring that you minimize the eventual tax consequence, whether as a business directly or indirectly for the employees that even work, with you. How about complying with the tax laws? The truth is that when people hear compliance with respect to tax laws, especially SMEs, they have nothing to worry about, because you're not paying taxes anyways. So if the laws are currently structured in such a way that you are not required to pay taxes, and you have certain disclosure requirements, you are just supposed to file returns, then you should not be found wanting. Because if you are found wanting, guess what? There's going to be penalty, for not filing. And those penalties are going to then become burden for you at the time when your business wants to scale. And that's a major challenge. I've seen SMEs that have grown now taken back to those days where they started, and then they now have huge tax burden to settle, and then they would certainly struggle with that. Unfortunately, some of them have been the reason why the SMEs that, such an SME that are taking off, are to start nose diving again, because the law is clear, and when you're interpreting the tax laws, there are definitely no emotions. Some of these penalties are also they are, of course, they are penalties, so they are not meant to be very friendly or being a pat in the back, right? They can really be heavy in terms of their cumulative impact. Some of them compound on a daily basis, some of them compound on a monthly basis. So you don't want to do that to your business as an SME. So in conclusion, the best way to ensure that you reduce your tax liability as an SME is to plan smart, pay less, and then certainly continue to grow your business in a sustainable, manner. And the best thing you can also do for yourself is to ensure that you continue to be a part of clinic like this organized by Business Day, towards ensuring that the overall community is giving the knowledge that is required for you to be able to run your business as an SME. So I'm going to stop here so that we have a lot more time for questions and other interactions. Thank you.
Wow, thank you so much, Adeyemi. That was very brilliant. Thank you for quickly giving us a brief rundown of presentation, and talking about the importance of tax planning and other things that was you mentioned in your presentation. That was an amazing one. Thank you so much. So I would like to call on Taiwo to also proceed with his own presentation.
Thank you.
Taiwo, are you there? Please, you can unmute and share your slides. Okay, so I think Taiwo is having a bit network. Okay, okay, it's here. Thank you.
Yeah, good afternoon, everyone.
Good
And
afternoon.
thanks for having me here. Oladejo has actually said pretty much about what we want to talk about, what's the purpose why we're here. So I'm just going to do a brief summary of my presentation. Okay. So for my own part, I believe tax planning should not just be to reduce tax exposure liability. It should be majorly for, or it should be mainly for business sustainability. Whenever we plan our tax, we should look towards how this planning is going to affect us in the future, how this planning is going to help us build a sustainable business. So, if you, based on the current trend in Nigerian tax and all over the world, we have situations where the tax system has really shifted because governments all over the world are relying more on tax. And because of the reliance on tax, everybody, both SME and large companies, have to ensure that they prepare themselves, they guide against huge tax exposure. Sorry, can you hear me? I'm having challenge with my slide.
Hi, Taiwo, I can hear you.
Okay. So, as I said, every business, every company needs to look into the way the tax system is going and how they can guide against it in order for them to be able to optimize the tax efficiency and ensure that whatever tax planning they have aligns with the company's overall goal value and financial health, which at the end of the day improves their bottom line and encourages their sustainability. So what's tax planning? Tax planning is just an intentional strategic decision put in place to minimize tax liabilities while ensuring full compliance with tax laws. So tax planning for business sustainability. Well, just as Ala did have said, for companies or SMEs to benefit, to take full benefit of tax planning, they have to be able to utilize or know their tax intensive and tax credits, optimization of business structure, whether you're SME or limited, you have to know what the tax position is. Then you also have to know what tax deduction are you even entitled to claim, and what are those requirements for you to claim those tax deduction. Then you also have to know you have to be able to manage your tax timing, your deferred tax position at what time, or how do you structure the tax cash flow. And also, you need to also ensure that you consult professionals or consultants in this field. Then this last one is what I actually want to emphasize on: active involvement in enactment of tax laws. My past experience with SME companies is that a lot of people are quite docile when they are making tax laws. They don't contribute and they show zero interest in it. And at the end of the day, they end up being hit by the tax laws. And start crying after the law might have been signed, after the bills or the laws might have been signed. So I believe SMEs should be interested in tax matters. They should be interested in tax laws. When the National Assembly, the fiscal policy, the committee, and whichever that is required to do this, and they're carrying out this exercise. As a citizen of the country, we have the right to also be able to probe into some of these things. We have the right to also be able to tell them to what extent this is going to affect the business and the country at large. So what are the benefits of tax planning? It helps to reduce tax liabilities. It helps to improve cash flow. It enhances profitability. It aids tax laws compliance, and it strengthens business competitive advantage. So what are the limitations faced by SMEs in tax planning? So the points I've noted are based on my personal experience with SMEs. A lot of them lack interest in tax. They just don't want to be involved. Even as a consultant, if you're talking to them about tax, they'll tell you, I've given you this job, just go and do it. And I feel they are meant to be interested, because whatever impact the tax law will have, it would definitely affect them. And there is no point taking medicine after death. So if you have interest in the tax system, you would be conscious anytime you are taking a financial decision. You would want to know what are the tax implications of these financial decisions. So it is important that SMEs should ensure that they have full interest in anything that has to be taxed. Their interest should not come when there is problem. The interest should not come when the liability has crystallized. From the point of initiation of the transactions, they need to know what tax implication does those transactions have, such that they would have mitigated against or planned against whatever effects the tax law will have on those transactions. So it is key for SME to have interest in tax. Then the other one is poor knowledge. How do you want to do tax planning when you don't even have the knowledge of what the tax is saying? So you have to build capacity, you have to do research, you have to go to the tax authorities website to check on new developments. You have to be on a WhatsApp group or a social media where they talk about tax, so that whenever new things come up, you'll be able to, grab it and make use of it. So another thing that affects or limits or create limitation to SMEs to plan their taxes, poor record and accounting system. The first speaker have said it, so I shouldn't waste much time on it. Then we also have limited financial resources. Then we have the complex tax compliance system. So just to wrap it up, through the adoption of effective tax planning, SMEs can reduce their tax exposure, enhance financial performance, and ensure long-term sustainability. Tax interests should not come when the problem has crystallized. Tax interest should come up as at the time the decision to either incorporate a business or initiate a transaction is about to make. So thank you very much. I would like to stop here so that we can go to the Q&A section. Thank you.
All right. Thank you, Taiwo. Thank you so much. That was an amazing one. Thank you for sharing the benefits of tax planning and also the limitations SME face in tax planning. Thank you. So I would like to call on the next speaker, Ubong Ita, to also proceed with his own presentation. Ubong, if you're here, can you say hello? Okay, so while we wait for Ubong to be back, I think we can proceed to the Q&A section because the remaining speakers are absent for now. But I will do well to inform us once they are back online. Okay, so I will start with Adeyemi for the first question. I know you spoke about importance of tax planning and financial management. So okay, so here's my first question. What are some common tax mistakes SME make and how can they avoid it? I will take that again. What are some common tax mistakes SMEs make and how can they avoid it?
All right, thanks so much. A very common pitfall for SME, really is the lack of interest in anything tax. I think Taiwo has alluded to that while he was having his presentation, because you feel, of course, let's face it, right? When you're starting a business, what is paramount to you is the survival of that business. You want to ensure that the business survives. And if you are operating within a very specialized environment, specialized in codes like Nigeria, then you will understand why survival becomes critical, because if you are not very rugged and dogged, your business may not survive. So at that point, of course, because of the very harsh economic realities, and the environment that we operate in. So at the point, tax is certainly not going to be a top burner issue, for you, for a new business. And I think the government has also come to that realization in the past couple of years, since the advent of Finance Act. For instance, the tax rates didn't have any differentiation, for SMEs up until sometimes in 2019, thereabout. It has been a flat rate. You all pay your taxes, and then you see that compliance level was low, but the government, in realization, says, let's leave the small businesses, let them scale, let SMEs focus on what is core to them at the start of the business. And that's why the revenue threshold, and staggering the tax rate as you currently have it. If your business is less than 25 million, your turnover is less than 25 million, you pay at 0%. Between 25 to 100, you pay at 20%, and above 100, that's what you currently have. Based on the new tax law, you won't pay anything at all if your business is less than 50 million, in revenue. So the point is, a major pitfall is then for you not to be aware of what is in the law, and then you become completely uninterested because the law has already made room for you. There's no reason for you not to be interested. The law is not expecting you to even pay taxes. The law is just saying that be responsible in terms of your disclosure requirements. Your tax rate is 0%. So even if you have whatever amount in profit, it will be unassuming for you to have profit that is above 25 million anyway, if your turnover is not up to 25 million. But I'm just saying, whatever the amount of profit you have, by the time you multiply that profit with 0%, the tax due becomes 0%. So that's a major, major, major pitfall for SMEs, lack of interest in anything tax, and all of that. So I would answer that question in that manner and stop there so that we can take other questions.
All right, thank you so much. Thank you for spotting that pitfall because I know, yeah, it's true. A lot of SMEs lack interest in tax, and even they don't want to understand how it goes about their business. They just want to run their business and make their money. So thank you for quickly briefing us about the pitfall. So I would like to also ask Taiwo the next question. How can SMEs legally reduce their tax burden? I'll take that again. How can SMEs legally reduce their tax burden?
Yeah, thank you. The first thing is knowledge. What you know is what you'll be able to take advantage of. Just as Oladeji have said, interest is key for you to be able to take advantage and take full benefit of your tax credits, of tax incentives. Every SMEs have to be interested, and apart from they being interested, they also have to ensure that they seek for knowledge, either through a group or through a professional. They must know those credits that is available for them. They must know the credit that is available for them to utilize. They must also know what kind of business, what are the credits that is available for this particular sector. So if SMEs have knowledge about all these things, they'll be able to take full advantage of the tax credits and reduce their tax exposure. I mean, all through the tax laws, we have a lot of benefits that is available, but the question is, to what extent does SME owners know about this information? So I believe that for them to be able to deduct, for them to be able to take full benefit of all these, all of the tax incentives, they have to first of all meet the requirements of those benefits. Once they know what the benefits are, they meet the requirements of the benefits and eventually utilize the incentive or the credits that arises as a result of, those, as a result of them meeting the requirements of the benefits. I believe I've been able to answer your question.
All right, thank you so much, Taiwo. Thank you for highlighting that part that knowledge is power. So as an SME, you first have to seek knowledge about taxation, understand how it affects your business. So thank you. And you spoke a bit about tax incentives and how it relates to SMEs. So I would like to ask Adeyemi to answer the next question. What tax incentives or reliefs are available for SMEs in Nigeria? I will take that again. What tax incentives or reliefs are available for SMEs in Nigeria?
Okay, good question. At the moment, remember I said we are in interesting times.
Yeah.
On the 26th of June, 2025, the president assented to 4 tax reform bills that have been in the works for about 2 years now. So a major one is the Nigerian Tax Act, which was a bill which then became an act. So the provisions of that act also have some specifics for SME. But as we currently have it, the first one is the tax rate. The fact that your profit is not going to be taxed, is a major incentive for you as an SME. Because what the business is saying is, what the government is saying is, we recognize your stage of business. And in this stage of business, we are saying your primary responsibility is for you to develop your business. So go and develop your business without any fear of any other stakeholder taking any part of the money from you. Government, interestingly, is a stakeholder in any business. So that's a major incentive. Another major incentive is the fact that you have deductions. You have deductions that are liable to you. As an SME today, you don't have any obligation, for you to pay any income tax. When you also go to transaction tax, for instance, there are some obligations that have been placed on large companies that have been exempted, that SMEs have been exempted from. If you talk about VAT, for instance, specifically, as an SME, there is no need for you to say you are accounting for VAT or you are remitting for VAT. When you do any business with a large company, the government doesn't want to encumber you with additional administrative responsibilities, because again, they're cutting you some slack. Go grow your business. Essentially, that's what the government is saying. So when you look at that, in the current law, that's what you have. In the new law that has been proposed, it's not even different. There is continued recognition of your states as an SME. Remember what I said earlier? We didn't have these things in the tax laws, before now. There was no, currently the tax rate is graduated, even at the corporate level, to say 25 million, 0%, between 25 million and 100 million, you pay 20%. That is reduced amount compared to what large corporations would pay. At the moment, the definition is just that, okay, you're a small business, you're an SME, then you have nothing at all to pay. So imagine a regime where you are doing business, you're making money, and then you're not paying taxes, and legitimately so. That's what big corporations are going to be looking for, but they don't have that opportunity. So let me stop there.
All right, thank you so much, Adeyemi. That was a good one. I liked your closing line. Imagine a country where you just have to run your business without thinking of paying taxes as an SME. So that's fantastic. All right, so I would like to go over to the next question, and that's to you, Taiwo. How can business owners structure their companies to be more tax efficient? I'll take that again. How can business owners structure their companies to be more tax efficient?
Okay, thank you very much. Just as we earlier said in our presentation, you need to first of all ensure that the business you are doing is structured to meet up with the tax requirement, the tax exemption requirement. So, for example, if you are going to register a company, you know that registering it as a limited pays more than registering it as an enterprise, because as we speak today, enterprise companies are not exempted from tax, while companies with turnover of 25 million naira are exempted from tax. And if we are going to go into the tax reform, enterprise companies are only exempted to the extent of 800,000 naira, while limited companies are exempted as long as their turnover is up to 15 million naira. So one thing is key. You have to know, you have to decide on the structure, business structure you want to go into. Also, you have to ensure that you put a proper accounting system, proper accounting and record system in place, because in future or at the point of tax audits or any tax authority coming to your office to review your activities, you need to be able to present this information when being asked. So your accounting system, your record system have to be intact. Then another thing is SMEs have to ensure that they don't mix personal transaction, personal money with that of the company, because I've seen that a lot, and they struggle to explain themselves to the revenue when they come. Imagine a company that should have enjoyed 25 million naira turnover exemption, but because personal money entered into the account, at the end of the day, I mean, the turnover, rose to over 50 million naira, and at the end of the day, they are asked to come and explain. So you should be able to separate personal transaction from business transaction. Then the other thing is you also have to review your tax system. You should know at what point are you expected to pay your taxes, when are the due dates for filing returns. All these have to be documented. You have to know them so that you don't get foul of the tax laws and they are not being penalized at the end of the day. So I think I would like to stop here.
All right, thank you so much, Taiwo. Thank you. I like the fact that you highlighted the documentation part, because that will lead us to the next question. So over to you, Adeyemi. What roles does digital technology play in managing taxes and financial record? As we heard Taiwo speak about documentation, I think that is where the digital technology come in. So what role does digital technology play in managing taxes and financial record?
Okay, I think digital technology plays a significant role. I was at an event yesterday where you have the leadership of the FRS and the chairman of the LRS, in attendance and speaking on some changes and some expectations with respect to the new law. But the good part is, for SME, for instance, one of the major initiatives that the FRS just embarked upon, the e-invoicing initiative, where invoices are required to be transmitted on a designated platform, so that government and tax administrators can see the invoices from B2B, online real time as the transactions are happening. That places an additional burden, for instance, reporting burden, on companies, but that is for large corporations. Guess what? The turnover, the threshold of the turnover, for you to start complying with that, guess what that is? 5 billion naira. Imagine, compare that to the turnover threshold of an SME, of your typical small business, which is 25 million as we currently have it, or 15 million as it will be, from next year. So my point is that when it comes to digital technology and all of the initiatives that may be connected to that, SME really need to worry less. I think it's more of an upside for SMEs on the side of operations and business. Think about it. The bulk of you have a host of SME players, on social media platforms. You have food vendors that are making loads of amount of money, and they don't even have the public restaurants. They rely completely on others, for you to be able to transmit the order, for you to be able to fulfill the delivery, you have to rely on, other logistic companies, which they don't even own and they don't control, so those are extensive reliance on technological tools, and digital technological systems that you already have existing. So, but with respect to taxes and reporting obligation, I think government of today has been very kind on SMEs. That's my personal opinion, because the threshold could have just been 25 million, for instance, and they could have just decided, for instance, for the e-invoicing initiative to put everybody on board at the same time. But they said the threshold is 5 billion. That is as far away from SMEs as far can be. So if we take a cue from that, you will see that SMEs really do not have any worry on the impact of digital technology as it relates to tax for now in Nigeria, except for relying on such tools towards expansion and the growth of their businesses.
Okay, thank you so much, Adeyemi. Thank you for highlighting that they don't have to worry so much so long as this new tax law is in work in Nigeria, and also they don't have so much to worry about digital technology as regards to taxation. Thank you. So I would like to ask Taiwo this question. What's the impact of poor tax planning on business growth and investor confidence? I'll take that again. What's the impact of poor tax planning on business growth or investors' confidence?
Thank you for that question. The major impacts for poor tax planning and non-compliance to tax is image reputation. It's going to affect the company's image, because if imagine FRS publishing that you've not been paying tax, obviously investors would run away, and company would eventually die. Also, we also have issues of legal charges. The law have given the revenue the right to take you to court to enforce whatever liability that you've incurred. Then we also have the issue of interest and penalty. Don't comply, and the revenue have the power to do what we call best of judgment, BOJ, on you, and definitely you will eventually be asked to pay. And also another thing that would happen is that if you don't comply, you also be exposed to tax audit and investigation, which can cripple your operation, because you can imagine you having to travel to Abuja for tax meeting, tax reconciliations, and things like that. So it is, I think, it's pretty. It is much more important and necessary for SMEs to ensure that they comply with tax laws and regulations, so that all these that I've mentioned, will not crumble their business. Thank you.
All right, thank you so much, Taiwo. That was a brilliant insight. Thank you. So as you can see, it has been an insightful conversation, and you can tell that, I've been enjoying every breath of this conversation, but sadly we have to wrap up. So I have one round questions for our speakers today. So over to you, Adeyemi. What are some red flags to avoid during tax filing or audits? Should I take that again? What are some red flags?
No, I got it.
Okay.
I got it.
All right.
So thanks so much for the session so far. I think the issue of audits for SME, we should start from saying that it is a matter of when, and not if. Except you are planning as an SME owner to run a business that you're just going to shut down very quickly. Because as long as your business continues to grow, and Nigeria has enabling environment in terms of population and need, depending on the type of your business. So the chances that you can plot that your business will grow when you do things rightly, the chances are reasonably high, So at some point when you scale, audit is going to happen. And I've seen this happen many times, and it's usually very painful, because when audit happens, all of the things you didn't take seriously will then come back to become huge liabilities for you. So the best thing I would say is one major thing to avoid is poor record keeping. Keep in mind that an audit would come. It's not a matter of if, it's a matter of when. The tax authorities will wait for you till you become formidable, till everybody knows you, till you become household. And don't ask me why would they wait till that time. That's how they do, because there's also costs, towards ensuring compliance, cost of collection and cost of compliance. Nobody wants to spend 20 naira to secure 1 naira, for instance. If you have to spend 20 naira of your money towards collection or enforcing compliance, you want to be sure that a reasonable amount would come back. So sometimes they wait for these issues to become accumulated. You might say that's not a good strategy, but that's what currently subsists, so that it will make sense when the numbers are reviewed over the period. Another reason is also there are items that are not going to start and end within a financial year. For instance, if you have receivables, it will be good to see, receivables are saying some people are owing you. It will be good to see how people that were owing you in the first year eventually paid in the second year. Some of them spilled to the third year and like that. So if they are reviewing about 5-year cycle together, they can see a better picture. From the 100% of the people owing you in the first year, all of them finish paying in the third year. So we can take a judgment that in the next 3 years, nobody should be owing you and stuff like that. So bearing in mind that audit will certainly happen someday. And one major thing, the second thing to bear in mind is the fact that, remember, companies don't pay tax liabilities because they actually owe them. This is strange, but I'm going to say it again. Companies don't usually just pay liabilities because they owe them. They pay because sometimes they are unable to prove that they do not owe those liabilities. I take that again. Companies don't just pay liabilities because they, in fact, owe those liabilities. They pay sometimes because of their inability to justify that they, in fact, do not owe the liability. And what are you going to use to justify? Your documents, your records. So if you don't have the records, you have put yourself in a very difficult position where you cannot challenge whatever position the tax authorities may take, albeit unfavorable towards your business. You might not have earned the income. The business might actually not have gone in that manner, but we are talking about a couple of years. You might have moved offices. You know how these things are. You might have changed location from one place to the other. The business started in your living room. At some point, you moved to a friend's place. It was a one store. At some point, you graduated and rented a place. Now you have your own building. That's when they are coming. And they are asking you for that very first receipt of the very first contract that your father-in-law's friend gave you. You know how it can be difficult for you to bring your great-grandmother's head, the woman that died many, many years ago. And that's what you need to prove that you do not owe a tax liability. So in closing, my remark would be, don't make that mistake, because audit would happen. It's a matter of when and not a matter of if. Thank you.
All right, thank you so much, Adeyemi. Thank you for the closing remark. Audit would eventually happen. It's not a matter of when, but it will eventually happen. So I would like Taiwo to also answer this last question. What are some red flags to avoid during tax filing? That would be your wrap-up question for the day.
Well, thank you very much. Just as Adrian have said, your record has to be intact. Also, you should be able to tell your story. Tell your story in the sense that you should be able to take the revenue down the line of how those transactions has happened. Because in fact, I had an experience just like yesterday, and I noticed that the revenue was trying to infer or put words into my mouth, and I had to tell them that no, that is not the way the transaction went. So what am I trying to say? You have to have, as a business owner, you have to have detailed understanding of your line of business. You have to be able to tell the revenue how this business actually happened, what happens, I mean, your accounting system, you should be able to pull them through. Because if you're unable to do all these things, then, I mean, to be difficult for you to be able to prove to the revenue, when the audit eventually happen. Then another thing you should also be mindful of is, what's it called? Your record, your receipts, your schedule have to be intact, because when these people come, they will request for your audited account, they will request for your tax computation, they will request for your trial balance, they will request for your GLs and source documents. All these things must be well kept, and they must be accessible, so that you'll be able to explain yourself when audit comes up. I think everything still has to do with documentation, because without documentation, just like Adian have said, whatever liability you are paying may not necessarily be because you owe them, but it will be because you don't have proper explanation to convince the revenue on what has happened in the past. So all SMEs have to have it in mind that no matter how challenging or difficult it may be, they cannot be lazy in ensuring that their documents are intact. So I think I would like to stop here.
All right, thank you so much, Taiwo, for that closing remark. Thank you for spotlighting the red flags to watch out in tax planning. And of course, this has been a rich and practical conversation. I want to say a very big thank you to our esteemed speakers for breaking down such a complex topic with clarity, from identifying tax saving opportunities to structuring your business the smart way. Today's section has reminded us that tax doesn't have to be scary. It can be strategic if you plan it so well. And to every SME owner listening to us right now, don't wait until the end of the year before you start planning and making documentations about your business. Avoid poor recording, as our esteemed speakers have said, and bear in mind that audits will eventually happen. In Adeyemi's voice, it doesn't matter when it will happen, but it will eventually happen someday. So thank you so much for being here today. Once again, I am FL Adern, and it has been an absolute pleasure moderating this impactful section. Until the next time, let's keep building smart businesses. Thank you, and see you at the next edition of SME Clinic. Have a nice day.